वेलकम बैक टू अनदर सेशन। आज के सेशन में हम दोस्तों डिस्कस करेंगे बेसिक्स ऑफ एन ऑप्शन। जैसा कि हमने पिछली वीडियोस में डिस्कस किया डेरिवेटिव्स, और आज की वीडियो में हम डिस्कस करेंगे बेसिक ऑफ ऑप्शंस। सो ये होते क्या हैं ऑप्शंस? ऑप्शन जैसा कि हमने डिस्कस किया, एक राइट होता है बट नॉट एन एब्लिगेशन टू बाय। ऑप्शन अगर हम कॉल ऑप्शन की बात करें, इट इज राइट टू बाय बट नॉट एन ऑब्लिगेशन। और उसी तरह अगर हम पुट ऑप्शन की बात करें, राइट टू सेल बट इट इज नॉट एन ऑब्लिगेशन। सो अब ये आज की वीडियोस में हम बेसिक्स एंड ऑप्शंस डिस्कस करेंगे। टाइप्स ऑफ ऑप्शंस कौन सी होती है, अमेरिकन वर्सेस यूरोपियन ऑप्शंस कैसे होती है, ऑप्शन कॉन्ट्रैक्ट्स क्या होते हैं, और एक्सचेंज पे ऑप्शंस कैसे ट्रेड होते हैं। ऑप्शन से रिलेटेड टर्मिनोलॉजीज को हम आज डिस्कस करें। तो ऑप्शन क्या है कि ऑप्शन एक कॉन्ट्रैक्ट है गिविंग द होल्डर द राइट टू बाय or sell an underlying asset at a predetermined price before on a specific date. Let's understand the option as a contract. See, there are two parties A and one party is B. A is the option buyer, B is the option seller. Now A wants to buy, let's say, a stock who's trading at price of rupees 200 in exchange. So this is this is called spot price. Now A enters into contract with B for, let's say, for 1 month. As A ये सोच रहा है कि जो इस स्टॉक का प्राइस है 200 से 250 हो जाएगा, मतलब कि एक बुलिश एक्सपेक्टेशन है कि जो स्टॉक का प्राइस 200 से 250 हो जाएगा. सो ए एंटर्ड इनटू अ कॉल ऑप्शन विद बी, और जो स्पॉट प्राइस है वही ए कहता है कि स्ट्राइक प्राइस 200. सो ए ने एंटर किया ऑप्शन कॉन्ट्रैक्ट बी के साथ, और वो कहता है कि कल को 1 महीने बाद इसका प्राइस अगर 250 होता है स्टॉक का, तो आई विल पे ओनली 200 रुपीज एज अ स्ट्राइक प्राइस. So they have entered into a derivative option contract for which A has given a premium to B. Option seller or option writer आपका रिस्क क्यों उठाएगा when you are paying a premium? So A has given a B, that is premium. Now on date of maturity, strike price 200 और spot price हुआ 230. So A has exercised option. जो डेट ऑफ मेच्योरिटी को हमारा स्पॉट प्राइस है वो 230 है, बट ए ने कहा था कि वो ऑप्शन कॉन्ट्रैक्ट के अंदर कितने में उठाएगा, ये स्टॉक लेगा 200 रुपए में. तो ए को यहाँ पर एक प्रॉफिट हो गया, वो हो गया 30 रुपीज का, बिकॉज ए ने क्या किया, स्ट्राइक प्राइस 200 रुपए में वो एक्सरसाइज कर ली अपनी ऑप्शन. नाउ इफ ऑन डेट ऑफ मेच्योरिटी जो स्पॉट प्राइस है वो 180 है. So in this case, A अपनी ऑप्शन को एक्सरसाइज नहीं करेगा, क्योंकि जो चीज उसको 200 में उसने बुक की है वो एक्चुअली में डेट ऑफ मेच्योरिटी को कितने की है, रुपीज 180 की. सो इन दिस केस ए विल नॉट एक्सरसाइज द ऑप्शन. सो इन दिस केस ए हैज नॉट एक्सरसाइज द ऑप्शन एंड बियर्स अ लॉस. ए का लॉस क्या होगा, that whatever the premium that he has paid to B, So in case of option, जो buyer का loss है, option buyer का loss है, that will be limited to the extent of the premium that he has paid to the option seller or option writer. अब इस केस में अगर स्पॉट प्राइस 180 होता है एक महीने बाद, तो ए कहता है ठीक है, मैं ऑप्शन को क्यों एक्सरसाइज करूं, वो मुझे मार्केट में, कैश मार्केट में वो चीज मुझे 180 की मिल रही है, तो मैं वहां से बाय कर लूंगा. तो दिस इज कॉल्ड एन ऑप्शन methodology. In this case, we have talked about call option. A call option means an obligation to buy or not to obligation. Call option means a right, but not an obligation to buy. It is a right. Since in this case, if a spot price on the date of maturity is greater than a strike price, then the A will exercise the option. If a spot price on the date of maturity is less than a strike price, then A will not exercise the option. So this is called as the option contract. So discuss who is seller, the person who sells the option and has obligation to fulfill the contract if the buyer decides to exercise it. It means the option in option contract, only the buyer is in at the beneficial position because the buyer has the right, not an obligation. Once the buyer अपना right को exercise करता है, then seller is bound to honor that option contract. If buyer exercise option contract, then seller must fulfill its obligation under the option contract. So there are two types of options. There is a call option. We have discussed a call option gives the buyer the right to buy an underlying asset at a predetermined price, or put option gives the buyer the right to sell the underlying asset at a predetermined price. Usually, call option is taken by the buyer when the buyer hopes the market is likely to be going in bullish phase. The market likely to be in bullish phase. And put option is likely to be exercised when the buyer of the option hopes that market is likely to be going bearish phase in future. Bearish phase in future. So this is basically an option terminology. Let's say as we talk, options can be dealt in exchange index as well as on stocks. So this is a typical example of the index options, that is trading on Indian exchanges. So instrument type, Nifty call option. Nifty, so instrument type option index, underlying asset Nifty 50. So this underlying asset means Nifty 50 means we have to track the value of the Nifty. If the Nifty 50 goes up and the Nifty 50 goes down, then we have to determine the whether we have to exercise the call option accordingly or not. So this is the date on which the option contract is likely to be expired. This is European option. Indians options are typically called as European options. European options are one which can be, option contracts which can be settled only at the time of maturity. There are American options also which can be settled on or before the maturity. But in case of European options, that option contracts or option positions are being settled at the time of maturity only, or the maturity of the contract only. So this is the option type of European option. So this is the strike price at which the option has to be exercised. This is the open price of an option. premium that has to be paid. This is the high price gone. This is the lower price gone. This is the closing price of the option premium gone. That is a traded volume. 61330 contracts has been traded under the call option. And open interest means positions which are being carried or unsettled position, that is open interest position. And the value of Nifty is 18,315. So this is the contracts which we has been been traded during the day, and this is the premium, that is a 125 rupees premium open when the exchange was open. This is the open premium, closing premium, and the day high, day low has been given. So how quote for the Nifty put option will be given? This is the strike price. This is the underlying value. Underlying value, it means spot price also. Other things there. Other things as discussed on in the call option details. So index option versus a stock options. An option, index option means an option where the underlying asset is a stock index like Nifty and Sensex. These options basically do not involve buying and selling physical stocks, but rather settled based on the index value. It means, see, it is an index, so delivery is not possible or buying and selling like a physical stocks, but they are settled based on the index value, that is value which is been reflected at the time of the maturity of the contract. A stock option where the underlying asset is an individual like stock like ONGC metal, and the buyer has the right to buy or sell the underlying stock. When the buyer has exercised the option, then the physical delivery of the stock took place accordingly. But in case of the index option, the physical delivery is not possible. The values regarding the index value, that is depending upon the various factor, or what is the index value that is reflected at the expiry of the contract, is being settled among the parties. So buyer of an option. The buyer of an option is also known as the holder has the right but not an obligation to buy or sell the underlying asset. The call option. The buyer has the right to buy underlying asset at the strike price. The call option is usually taken when जब buyer को लगता है कि एक market bullish phase में जाने वाली है, जहाँ पर stock prices बढ़ने वाले हैं, तो वो अपने stock prices के जो risk को hedge कर लेता है by entering into the option contract at a strike price. तो पुट ऑप्शन इसका ऑपोजिट होता है कि जब बायर को लगता है कि जो मार्केट है वो एक बेरिश फेज में जाने वाली है, फॉल आने वाला है मार्केट में, तो वो पुट ऑप्शन के कॉन्ट्रैक्ट्स को बाय कर लेता है. द बायर हैज द राइट टू सेल द अंडरलाइंग एसेट एट द स्टॉक प्राइस, स्ट्राइक प्राइस. The buyer pays a premium to the seller for his this right. The price that is buyer pay to the seller, that is called option premium. क्योंकि जो buyer है, he is hedging his risk and someone is accepting the risk, that the option writer is accepting the risk, for which option writer charge a premium, that is called option premium. The writer of an option. The writer of the option is also known as the seller of the option, is the party who receives the option premium, assumes the obligation to buy or sell the underlying asset if the buyer exercises their right. Call option writer, he has the obligation to sell the underlying asset if the buyer exercises the option. Put option writer में क्या है कि once the buyer has availed the option, that he has sold his existing stock, then the put option writer is obligated to buy the underlying asset if the buyer exercises the option. Writer earns the option premium, but they take on the risk of having to fulfill the option terms. So writer earns the option premium. Basically, when we are talking about the holder of the option, they have a limited loss because their loss is very limited to the extent of the option premium they have paid to the you know to the option writer. But in case uh, see worst to worst happen for a holder of the option that he will not exercise the option at the expiry of the maturity, considering the facts like what is the stock price, what is the spot price of the commodity, and the strike price of the commodity. Once they, but in case they have option, in case they have exercised their option, then the option writer is bound to, honor the option contract. So in nutshell, we can say the option holder has very limited losses to the extent of the premium they have paid, but the option writer की जो losses bear करने की capacity है, that is unlimited, unlimited, unlimited. ऑप्शन राइटर के लॉसेस होने की जो कैपेसिटी है वो अनलिमिटेड है. So now discuss the American versus European options. The holder can exercise the option at any time before the expiry date. In India, all options are European options, meaning options can be exercised on the expiry date. The option can be expired on or before the expiry date, but in case of European options, that options can be can be exercised on the expiry date. So this is the European option. So India follows the methodology of European options. Option premium. The option premium is a price paid by the option buyer to the option seller. It is the cost of acquiring the right to exercise the option. So हमारे केस में एग्जांपल्स में ऑप्शन प्रीमियम्स कॉल पुट ऑप्शन के प्रीमियम जो हमने इंडेक्स डिस्कस किए प्रीवियस वीडियोस में, तो उसके रिगार्डिंग ये ऑप्शन प्रीमियम पे करना. तो अगर हमें कितना ऑप्शन प्रीमियम पे करना है वो डिपेंड करता है हमारा ऑप्शन कॉन्ट्रैक्ट पे. ऑप्शन कॉन्ट्रैक्ट पे ऑप्शन प्रीमियम मल्टीप्लाई बाय लॉट साइज कि एक लॉट में कितने कॉन्ट्रैक्ट्स हैं. लेट्स से ऑप्शन प्रीमियम है 124 और एक लॉट में 64 हैं, तो हमें इतना ऑप्शन प्रीमियम पे करना है फॉर इधर टू exercise or to forgo the option. स्पॉट प्राइस. तो स्पॉट प्राइस हमने जैसे डिस्कस किया, जो अंडरलाइंग वैल्यू ऑफ निफ्टी है इन केस ऑफ कॉल ऑप्शन वो स्पॉट प्राइस था. तो स्ट्राइक प्राइस इज कॉल्ड एन एक्सरसाइज प्राइस, इज द प्राइस एट विच द ऑप्शन होल्डर कैन बाय in case of call option or sell in case of the put option the underlying asset. तो स्ट्राइक प्राइस जिस प्राइस पे ऑप्शन आपको कॉन्ट्रैक्ट को एक्सरसाइज करना है वो होता है स्ट्राइक प्राइस. अगर आप कॉल ऑप्शन की बात करें, अगर तो स्पॉट प्राइस is greater than a strike price, so there is option exercise होगी, ऑप्शन एक्सरसाइज होगी बाय बायर यूजली. अगर और पुट ऑप्शन की बात करें, पुट ऑप्शन की बात करें अगर स्ट्राइक प्राइस ग्रेटर होगा स्पॉट प्राइस से, अगर स्ट्राइक, क्योंकि आपको ऑप्शन सेल करना है तो आपको महंगा सेल करना है, तो अगर स्ट्राइक प्राइस ज्यादा है स्पॉट प्राइस से तब ऑप्शन एक्सरसाइज होगी. एक्सरसाइज होगी। तो कॉल का उल्टा पुट होता है। So open interest refers to the total number of outstanding option contracts in the market. It shows the level of activity and liquidity for a specific option contract. So कितने contracts जो remain है outstanding, जो unsettled नहीं हुए, that is called open interest. Since the options are traded on Indian exchange or European style, so there can be exercise on the expiry date. The exercise is based on the settlement value using the closing price of the underlying asset on the expiry date. Unsettled contracts, positions which has been carried by the option holders or the writers is called open interest. An opening transaction, establish or increasing of trading position, opening position purchase, buying an option to create or to add a long position, और short position क्या होगी? Short option, selling an option to create or add a short position. Long position means you are buying an options. Short position means you are selling an options. Buying an option to close a short position is also called as covering a short. Buying an option to close a short position is called as to covering a uh, short covering. Closing transaction offset or eliminate an existing position is also called as squaring off. Selling an option to close a long position, closing sale, that is called. And a closing trade must involve an option with the same strike price and expiry date.